exhilarating end to 2012 brought a fiscal cliff deal in Washington, which changed tax preparations for filers. As those alterations were too complex and varied to cover in one interview, today we'll bring you part one of a three-part series with Tina Barrett. In the following two shows, we'll discuss estate taxes, capital gains, and the alternative minimum tax. This week, Tina explains changes to depreciation and the payroll tax, and why some uncertainty is based on how soon you can even file.
IRS was sitting and waiting, deciding what Congress was going to do, so they didn't have forms prepared. They are not at all ready for a 2012 filing season. So they're telling us right now that we can file nothing until January 30th, and then most people will be able to file then, but the one main form that we're going to be missing is the depreciation form. So anybody who has depreciation on their tax return, they're telling us right now late February, more likely mid-March, before that form will be ready, which of course puts us after the March 1st deadline for farmers.
Right, this makes it a very tight window.
It does, you know, and I think from a tax software standpoint, we're going to be able to prepare tax returns and have them ready, but we have no idea when we're actually going to be able to file them, and we've gotten no guidance as to whether IRS will give us a reprieve on a penalty for farmers who are supposed to pay by March 1st, even if we can't file it until after that time. So one option we have is to get an estimate paid by January 15th, which extends our time to pay until April 15th. That's a really short window at this point. But if you're at all concerned and definitely don't want to pay a penalty, that's the only guaranteed way we know at this point to avoid that.
That payroll tax for employers, when do they have to backdate that for or from?
Yeah, so what actually wasn't in the fiscal cliff bill was an extension of the payroll tax holiday. So what took us 2 years to get used to of withholding 5.65% is now gone, and we have to go back to withholding 7.65%. So if you did paychecks between January 1st and now and realized you made a mistake, they're giving us until February to make it right, but we need to get that done. It's not quite as fun as the mistake you made when you over-withheld, because now you have to withhold more from your employees' paychecks.
And tell them about it, most likely.
Exactly. So it's not going to be quite as much fun, but we want to get that fixed.
The depreciation from 2012, the last time you were on, we had joked about, you know, what they were going to be able to write off and what they weren't going to be able to write off. The tax-free, or let's just talk about depreciation for itself. How does that change for 2012?
So what they did was gave us retroactive to the beginning of 2012 a $500,000 of 179. So what we didn't think we were going to have, they gave us, and then they also did that for 2013. So you got all of this year to spend money too. But it does change things from how we planned tax planning. We can certainly, if we were just up on high income, we can certainly lower income now with those extra purchases. Or we could consider a contract election, which is a little bit complicated, so you want to make sure you talk to a tax advisor on that. But if you have a grain that you delivered in 2012 and deferred the money, we could potentially pull that in, offset it against depreciation, and reduce our inventories a little bit.
For 2013, depreciation at 50%, is that correct, of new purchases?
Right. So they also extended the 50% bonus depreciation, which is a good news for all the building companies out there, because that gives us one more year that we can put up a machine shed and write half of it off in the first year of purchase. And so that's a calendar year thing. So the bonus goes through December 31st, 2012, and for any fiscal filers, the Section 179 follows their tax return year. So their 2012 and 2013 tax returns are both going to get a $500,179.
As far as tax-free distributions, what are the changes there?
Okay, so one of the other things that they did...
It seems like you're gearing up for something big. All right.
Yeah, well, one of the things that they changed for 2012 is, and they've given this to us a little bit in the past, but what you can do is take money out of your IRA and give it directly to a charity, and it lets you avoid having to itemize to get that deduction. So if you took a distribution from your IRA in December of 2012, you can turn around now and give that cash to a charity and make it work, as long as you do that in the month of January. Or you can take money out of your account, your IRA, have it sent directly to a charity in January and deem it a 2012 withdrawal. Or you can do that the entire year of January of 2013. It's a really nice thing if you're over the age of 70 that you can do, lower your taxable income and get that money into charity without having to itemize.